morning. Welcome to a new week. We have 275 minutes ahead of us. That's a lot of time for us to do relevant and current business here on Business Morning on Channels Television. I'm Ini John and go, well, let's start using it. We won't waste any of those 275 minutes. Starting with global oil prices. It dipped in Asian trade on Monday as investors tread cautiously ahead of fresh economic data from top consumers, that's the United States and China, this week. Though expected crude supply cuts from Saudi Arabia and Russia limited losses. Brent crude futures fell 51 cents to $77.96 a barrel, while U.S. West Texas Intermediate crude was at $73.34 a barrel, and that's down 52 cents. Government data shows that China's factory gate prices fell at the fastest pace in over 7 years in June, as the momentum of economic recovery in the world's second largest economy has slowed. The oil benchmarks gained more than 4% last week to touch their highest mark since May, rising for a second straight week after the world's biggest oil exporters, Saudi Arabia and Russia, pledged to deepen supply cuts in August. Now let's move to edible oil, where Malaysian palm oil futures traded in a tight range on Monday ahead of key data with concerns of higher June inventories weighing on the market. The benchmark palm oil contract for September delivery on the Bursa Malaysia Derivatives Exchange gained 10 ringgit, that's about 0.26%, to 3,844 ringgit, and that is equivalent to about $824, and that happened during early trade today. The Malaysian Palm Oil Board and cargo surveyors are scheduled to release June and July supply-demand data later on today. On Friday, Malaysia forecasts the peak of El Nino weather phenomenon, which brings prolonged hot and dry weather, and will hit the country at the beginning of next year, 2024. Dalian's most active soy oil contract fell 0.8%, while its palm oil contract eased 1%. Soy oil prices on the Chicago Board of Trade were up 0.6%. Palm oil is obviously affected by price movements in related oils as they compete for a share in the global vegetable oils markets. Now let's come back home here in Nigeria. The Center for Promotion of Private Enterprises, CPPE, has commended President Bola Tinubu's decision to suspend the excise duty escalation contained in the 2023 fiscal policy measures imposed by the previous administration. The suspension of green tax on some categories of vehicles, the deferment of effective date of the Finance Act, and some customs tariffs. The Chief Executive Officer, Dr. Muda Yusuf, believes that this move will normalize policy implementation processes, which is consistent with the national tax policy and best practice principles. While appreciating other policy decisions of the administration, especially ending the petrol subsidy regime, Dr. Yusuf is proposing that part of the additional revenues should be committed to fill the holes created by the recurring fiscal deficit. This, he says, will gradually reduce fiscal deficit and, by extension, the growing burden of debts. Well, we will have Dr. Yusuf join us shortly to give us more on that. But even before that, of course, the issue of palliatives been making the rounds, and we do know there are at least two groups. The Economic Council is there, and that stakeholders meeting that has been going on between Labour Union, the federal government representatives, and other stakeholders in the oil and gas industry. And they're expected to reach and implement some moves that are supposed to be palliatives by August. And while members prepare for their next line of action, we wait for them. Well, some economists have been suggesting ways that the federal government could make the most impact through palliatives, and of course with the extra revenue that is being saved. The average cost of fueling a car is now about 20,000 naira, about double of what it used to be before petrol subsidy was removed. Public transport fare reflects this. Routes intra-Lagos states such as Berger to Marina now cost 400 naira from 200 naira, and that's on the government mass transit. Lagos to Asaba is now 38,000 naira from about 20,000 naira. Lagos to Yola is now about 25,000 naira from 18,000 naira, and Yola to Abuja is now 15,000 naira from 7,000 naira. Same applies to keeping generators operational, a necessity in the face of poor electricity supply from the national grid. Small business owners attest to this.
Demands have reduced.
If you want to make gain of 500 naira, maybe at the end of the business, you sell 3 or 4 items and make 1.5 as your gain.
The federal government is not unaware of these consequences of what many economists have termed a necessary hard decision of ending the petrol subsidy regime.
So what I will say the immediate impact is an escalation in the cost of doing business. That's for businesses, and especially those whose operations depend largely on petrol, what they call PMS. So, and even if it is petrol dependent, that cost could spike maybe between 15 and 70%, in the sense that the smaller an enterprises, the greater most likely will be the impact. We now come to individuals and households, as we call them in economics. By all means, again, the cost of living will escalate. And of course, this will fall in terms of what they spend most of their money on.
Consequently, President Bola Tinubu has charged the newly inaugurated National Economic Council, led by the Vice President, to draw up workable plans that will ameliorate the harsh impact of the subsidy removal. There's also another group made up of trade unions and government representatives which has been meeting to initiate and implement palliatives for the same purpose. The group is working with a deadline of 8 weeks from June the 19th. The demands of the Trade Union Congress include minimum wage should be increased from the current 30,000 naira to 200,000 naira, setting up of intervention fund where government will be paying 10 naira per litre on all locally consumed PMS. Federal government should provide mass transit vehicles for all categories of the populace. Provision of subsidy directly for food items.
We need to have a presidential steering committee that will oversee everything. Then we also need to have technical subcommittees because, for example, when you talk about the issue of CNG, so the issue of CNG, you need experts. The issue of CNG, you need those people that are willing to invest in the issue of CNG. You need the National Oil Company, NNPC Limited, to come up with what they need to do and the time with which they are going to deliver.
In the meantime, economists have been sharing suggestions of what they believe are low-hanging fruits.
Government cannot say we are not going to collect taxes because taxes is a primary way of also getting revenue. But they could have something like a tax break. And for you to have a tax break, you have to be registered. So if I run a company today and I say I want to take part in this palliative process, then I need to register. If I register, let's say over the next 6 months or so, whilst we are struggling and making things to balance, then government can give me some tax concessions.
States have also been drawn into the need to provide succor for their residents. Edo and Kwara state governments have reduced working days in their states to 3 to reduce transportation costs for individuals. While for Ogun State Governor, there is a committee that's saddled with this responsibility.
There's no doubt that as government, it will be very ambitious for us to even begin to imagine that we will have a solution that would totally compensate 100% for this price differential. Whatever options that we agree on would only go a long way into reducing the impact. not totally eliminating it.
It's over a month since the new price of petrol has been effected and subsidy regime ended. Nigerians are eagerly waiting for the proposed palliatives to be effected to buffer the aftermath. Amy John Mekwa, Channels Television News. Yeah, it's over a month indeed. It was on May the 29th that the president said subsidy is gone. And I know a lot of people will not forget that voice in a hurry. And then we woke up, to the new price list. So the government is supposed to have saved some money between May the 29th, or let's say from June to July, So the whole of June, there was no subsidy on our petrol prices. So let's find out what may be happening or what should be happening in the post-subsidy regime. I did promise you that Dr. Muda Yusuf will be here physically, and he's here with us. Dr. Yusuf, good morning. Thank you for your time.
Good morning.
We saw that you used your weekend to think about this, so it's a good time to also talk about it. First of all, your commendation to the president's move, the executive order. But some people say, well, why should we celebrate that much? It's just suspension, deferment. It's still going to come to us, and we're still going to have to pay those taxes anyways.
No, not exactly. There is the deferment component of it, which was the Finance Act.
That's the Finance Act 2022?
Yes.
That's the one that is operational in 2023?
Yes. That was deferred till, I think September or
yes,
so.
September.
And the whole idea is to ensure that there is enough notice, to be able to implement those provisions. The second part, which is like an indefinite suspension, was the excise duty component and the grain tax. Those ones were practically suspended indefinitely.
Okay, because we just saw suspension, so, a lot of people are asking if it's just suspension, then it might just come back.
No, it may come back, but it's not likely to come back soon. The ones that will come back soon, the government was very specific as to the time that the Finance Act will be back, and also some provisions in the Customs and Excise Acts will be back. I think one in August, one in September. But for the excise duty
and the telecommunication 5%.
Yes, all those ones have been put on hold, as it were. So that is where the main relief is. Because the pressure that the excise duty was going to impose on the manufacturing sector was going to be very, very immense. It was going to be very profound, that it may even threaten the survival or sustainability of some of the firms. Because they already have a whole lot of issues they were contending with. There are all sorts of taxes, exchange rate, cost of energy, challenges of purchasing power, and all of that and all of that. So for it to now add, in addition to that, we already had excise duty they were paying. It's not as if some of them were not paying excise duty at all. But what the last administration did was to increase it further, even beyond what was in existence.
Yeah, we talked about some of those increases, the tertiary education, some of those, I think from 5% to 7%. You had some
from 2.5% to 3%.
Exactly. But those things still stand. They still stand
in the Finance Act.
Yes, so they will come into play by September.
They will still come in. And also there's a provision.
We're hoping there'll be a tweak to some of them. Anyway, Mr. Taiwo Oyedele is there now. So,
he's an advocate of reform.
Exactly.
So it's an opportunity for him.
We'll be watching out for him and play back some of his track offs.
Exactly. He's an advocate that we need to rationalize some of these taxes.
And to expand the tax net instead of increasing the taxes.
Increasing the taxes, So I think that is what he stood for. And I think the government believes in his position. That is why he has now been appointed to chair the tax and fiscal policy reform, which is a good thing. But just as you said, we need to celebrate cautiously about this thing, because the component that was just deferred, in the Finance Act, for instance, there is a proposal to increase the tertiary education tax. There is also a proposal that there will be an excise duty on all services. The Act was not specific as to which services will attract excise duty. So it was something that is, open-ended. So there are quite a number of concerns in the Finance Act itself. So for that, I think we'll still come back to engage on that. But at least we must acknowledge the fact that the excise duty, which is perhaps the biggest concern of the manufacturing sector, has been put on hold for now. So for me, I think that is something that we should commend the president for. At least he demonstrates some sensitivity, being responsive to the yearnings of the manufacturing sector. But we are still looking forward to more reliefs.
Exactly.
Because the man on the street is looking forward to more reliefs, and that is very important.
Of course, and that's what we're going to delve into now. Yes. Especially the issue of palliative. Now, it's been about a month. The government is supposed to have saved about how much? What should they be using it for? And we haven't seen the palliatives yet.
Well, I think some element of it is contained in the executive order.
Oh, okay. So we should take that as part of the palliative.
It's part of the palliatives.
Okay, all right.
But more importantly, particularly when we are talking about the issue of cost of living, cost of transportation, energy cost, electricity cost, cost of food, those are the things that are most paramount at this time. So when we talk about palliatives, these are the things we expect the government to do and do very quickly. And there are quite a number of instruments of policy that the government can use. Yes, you talk about the savings. We should begin to see evidence of plowing back part of the savings to support the vulnerable segments. Because the whole idea of this reform is to redistribute income, from those who are either looting the money, corruption and all of that, to be able to support the vulnerable segments. And the areas of key vulnerabilities are in the areas of affordability of food, cost of transportation, electricity, and energy costs. So these are the things that we expect government to do. And of course, government is talking already about reviewing wages, although the percentage of people...
The risk of that, too, on inflation is also...
It may not be that profound. Given the current policy regime, it will not be that profound. What percentage of our workforce are in the public sector anyway? But that needs to happen anyway, inflation or no inflation, because we cannot afford to leave the minimum wage at 30,000. What can 30,000 buy these days? Not to talk of even other wages of very senior people in the public and even the private sector. So there's a need to see that review. But the inflationary impact of it is not likely to be very profound if you take into account how we manage other segments of the macroeconomic environment. For instance, if you reduce the amount of ways and means that the government injects into the system, it will moderate inflation. If we're able to stabilize the foreign exchange markets and ensure that we have better liquidity, of course, there's still a bit of turbulence in that space. But after some time, we get to a cruising level and things will calm down. We get to an equilibrium where things will calm down because we had a huge backlog of foreign exchange demand, which had accumulated over the years. So that is exerting a lot of pressure currently on the I&E window. And with all these reforms, now the government has said that the international oil companies can also sell directly to the banking system. And I expect that even the BDCs, if they're also incorporated into it, all these things will ease liquidity in the foreign exchange market. So in a couple of months, I think that things should stabilize. So I think the thing to do now is for the government to come up with concessions. In addition to whatever they will do about wage review, concessions in the area of taxation.
One of the tracks we had in that report, Mr. Peter Bankole talked about tax holiday, even if it's just 6 months.
SMEs, we have a threshold of exemption of 25 million turnover for SMEs to be exempted from company tax and VAT. We can expand that, increase that to around 35 million for SMEs to be exempted. And even for payee, anybody earning 200,000 and below should be exempted from payee. Then we need to look at some critical segments of the economy, like those who are in the food sector, agriculture, processing, and all of that. We need to give them a lot of tax reliefs so that when their cost of production comes down, they'll be able to provide food cheaper. The same thing with those in petroleum products. Now, we have been told that quite a number of these petroleum marketers are now importing fuel. Rather than be talking about imposing VAT of 7.5% on diesel, that is not right at this time.
Yeah, we haven't
so
heard
we should
anything
freeze
about
all these
that.
things.
Yes, we haven't had any updates on that.
No, we should freeze it. That should be
it's still
reversed.
there.
Because we are talking about bringing down energy costs, especially in this transition period. I'm not talking about political transition now. I'm talking about the economic transition. We should freeze all these taxes. And the government should issue a circular to all its agencies. All these taxes, levies, all these 1,000 naira for proof of ownership, all those things should be suspended. Because we need to demonstrate sensitivity to the plight of the people. So all those things should be put on hold. And all these people importing fuel, if there are charges they are paying, if there are taxes that are being imposed, let us waive it. So that the landing cost of petroleum products can go down further. Because you cannot afford another increase. So we need to use a mix of tax policies, a mix of import duty tariff policies, trade policies to be able to calm this tension. Because we need to do that very, very quickly. And policy measures are low-hanging fruits. There are things you can deploy very quickly. Before you deal with issue of electricity and all of that, you have to deal with all of that, even electricity. The government should freeze the tariff on electricity for now.
And the discos will complain that they need the operational
But they need
costs.
to be supported by government. Why not? I mean, there's nothing wrong if we subsidize something like that. Luckily, we have 3 bands or 4 bands of electricity consumers now. The vulnerable segment, please leave them, let them have peace for now, so that people can continually adjust to the current pressures. So these are the things that we need to do. We also need to deploy trade policy, because there's a way in which your trade policy can also help to reduce the pressure on the people. There are quite a number of products that are produced within the sub-region. Tomatoes, onion, all of these things. Some of our neighboring countries have these things in abundance. There's nothing wrong if we ease some of this inflow into the country to ease the prices. We have rice mills all over the place. Lagos has the biggest rice mill in Africa today, but they don't have the paddy. They need the free stock to be able to roll out the rice. The same thing up north. Capacity utilization in many of these mills, I'm not sure it's up to 30%, because they don't have the raw materials. So without jeopardizing the interests of the rice farmers, if we need to augment what they are producing with the importation of rice paddy, let us do that. So that all these idle rice mills can come into operation, produce more local rice, and reduce the price. So these are some of the measures that I think we need to put in place. It's not everything that is actually money. If we tweak some of these policies, we can bring a lot of relief to the citizens.
And now we have the Economic Council sitting. We have, the meeting of the union and trade unions and government representatives all trying to put their heads together. So there'll also be a need to coordinate, because you've mentioned a whole lot of things, from the issue of tax relief to the issue of agriculture, working with the farmers, easing the borders.
Yes.
We do know that in Nigeria, sometimes when we do have challenges and the solution comes, from this quarter and that quarter, and sometimes there's conflict of interest. So, there should be a kind of coordination of all of this, because when you have too many groups working to solve a problem, then, we see from different perspectives and we might be clashing.
Yes, coordination is very important, so that we don't see conflicting actions. Now the president is very concerned about providing relief to citizens. Now, suddenly we heard that one agency has imposed VAT on diesel. One agency has imposed 1,000 naira
for car ownership.
For car ownership. Those things are conflicting. So every of these agents should take a cue from what the president is saying. And I'm happy the president appointed Adiza Bala Usman as special advisor on coordination or something. So that means that the president recognizes the importance of coordination in the policy process. And from the document we saw from the Policy Advisory Committee, the president himself is going to chair a coordinating committee of all the central bank, monetary policy, fiscal policy, trade. The president will be the chair. Again, that underscores the importance that the administration is placing on the significance of coordination. So coordination is very important. Now, Taiwo Odele is there now for tax reform. We should have some elements of trade reform. We should be talking of import duty reforms. We should be talking, quite a lot of things that need to work together.
It sounds very interesting times in Nigeria, and we see some positive moves and reaction from World Bank. World Bank upgraded our growth forecast from, I think, 2.8 to 3.3 and all of that. But one thing that's, his time is up. But, the president says he wants lower interest rates.
Yes.
And inflation is still surging.
Yes.
MPC is meeting later this month. I don't know how that is going to be coordinated.
Well, there are a number of ways. We have the development finance window, which was very robust under MFLA. We can continue with that. Because I know the real sector, quite a number of them also benefited. The SME window, also for some SMEs, the BOI, the Bank of Industry, all these development finance institutions, they can continue to provide that window. Because for some of them, it will not be easy to take loan or face the interest rate, the pure market interest rate. It will be very difficult, particularly for those in the real sector. So I think for a start, we can begin to explore the development finance window to be able to provide low credit and long tenured funds for some segments of the economy.
All right, sounds interesting. Even though some people have said that there's a need to audit, what the Emefiele time did with it, to audit the amount spent compared with the impact.
Of course.
Before we now delve into that again.
Of course. There are issues, and all these things needs to be properly fine-tuned.
Exactly. All right, we need to thank you so much, Dr. Muda Yusuf, the Chief Executive Officer of Center for the Promotion of Private Enterprise. Thank you for your time this morning.
Thank you. Thank you.
All right, let's take a break now. When we come back, energy costs 7.5% on diesel. Petrol supply, we'll find out what we can do about that. That's after the break. Stay with us. You're welcome back. Crude Oil Refineries Owners Association of Nigeria asking for CBN intervention and more crude. We do know that the issue of modular refineries have had a lot of questioning even before now, but perhaps things have changed. We have Mr. Eche Idoko, the Publicity Secretary of the Crude Oil Refineries Owners Association of Nigeria, joining us from our Abuja studio. Good morning, Mr. Idoko. Thank you for your time this morning.
Yeah, good morning, Ini. It's a pleasure to be with you this morning.
Yes. So, the situation seems to have changed in Nigeria. We see modular refinery, Crude Oil Owners Association, people like you coming to the fore now and even asking for CBN intervention. Tell us, how far have you gone with conversations that could bring you into the mainstream of providing or contributing to the provision of petrol and some other field that the country needs?
Oh, yeah, thank you very much, Ini. Quite a lot of significant progress have been made in bringing the modular refineries to the mainstream when it comes to issues of providing petroleum product to bridge the gap, the supply gap in Nigeria. Shortly before COVID and after COVID, the Ministry of Petroleum had set up a committee that produced an interim report, and a white paper had been presented on it that was supposed to address a lot of the issues that had bedeviled the development of refineries in Nigeria. And permit me to actually make this clarification. There's always this dichotomy or this differentiation between modular refineries and conventional refineries. But as a matter of fact, they are not different. They are meant to achieve the same purpose. So whether you are a conventional or you're a modular refinery, the idea is to help the country achieve, self-sufficiency in petroleum refining. So the whole intervention program that we are pursuing and what the government had done in time past was geared towards making the country self-sufficient in production of petroleum products, refined petroleum products in country. So we have the association alongside the government have done a lot in making sure that we are able to overcome these challenges in supply. And what you are seeing now around refining in Nigeria is a product of what had gone in time past. Yeah.
So tell us how far you've gone, because I know the issue of availability of crude has always been a challenge for most of the refineries, members of your association, especially now when you have the NNPCL promising Dangote, I mean, is operational now. We're expecting to get its products from this month. How do you hope to, get crude when even before Dangote, that was difficult for you? Now you have a major like Dangote. How do you manage the issue of crude availability in the face of that?
Okay, thank you very much. The challenges we had with crude over time was not with availability. It was about it was more or less with the policy that would make it available. So whether Dangote or no Dangote, we have enough crude to supply the refineries, the refineries and the licensees that we have in Nigeria. Beside Dangote, the modular refineries, about 30 of them, if you are to give them crude oil, you need just about 2.5 million barrels a day. Our probable reserves, our capacity is about 37 billion barrels. So we have more than enough. But then what we had challenges was the policy to drive it. And one of the big gains that we had over the year was the passing of the PIA that created a domestic supply obligation for crude oil for local refiners in Nigeria. And that has solved a lot of issues around the supply. But what we have lacking now is the policy implementation. But I must add at this point that recently the NMDPRA had reviewed their guidelines. 3 of them have been gazetted. There's one major one that affects local refining that we are expecting will be gazetted any moment from now, that will address the issues of supply. And then what we are saying is that what has been captured by the PIA and has also been captured by the regulatory guidelines should also now be implemented through a coordinated desk that would make it easy for refiners who already are constructing or refineries that are already operating access crude. Because right now they seem not to be, or before now, they seem not to be this coordinated approach to supply of crude. So where do you go to? You write to NMDPRA, do you write to NNPC? Now NNPC has become fully a business concern, is no longer a regulator. So we need the Ministry of Petroleum and the NMDPRA to coordinate access to this crude to make it easier for people, for refineries to actually access this crude. And so that is where the issues are now, having the right framework, the right policy framework, and the right platform for accessing crude from these suppliers. Because what needs to be done had already been captured by the PIA that says you are to consider local refineries first in supply of crude before even export. And then now that they've also abolished what they call the direct sale, direct purchase. It means we have more crude available to us and all that. It's just that coordination that is needed from the various agencies to make sure that refiners can access this crude.
And how far are you going with that coordination? Also, I'd like for you to chip in just before we run out of time, the issue of security. That is a major bane to the growth of our revenue from the oil and gas sector. As an association, do you have like a plan? How do you work? The federal government had to work with, some individuals. So how are you protecting your facility and products that will be coming from you?
Okay, so in terms of security, we do a lot of collaboration. The good thing about modular refineries is that the nature of its establishment is such that you have to work a lot with the communities, where we have a robust relationship with the host communities, and they become our frontline security providers. So the communities first, and a lot of them, because of the advantages that refineries, heightened refineries in their community brings, and also the provisions of PIE, we don't tend to have issues in terms of security, because they are also part. We inculcate them into the projects. Most of the licensees and owners of modular refineries work with the local communities. The local content provisions have also made it a lot easy. So they participate even from the development, from day one, from the clearing of the site to the construction and even to supplies. The contract of supplying and even off-taking, they are part and parcel of it. So it makes the issue of security a lot easy. We have also worked with a lot of governmental agencies, also fostering ways in which we can actually address issues around security or any other issues.
All right, thank you so much, Mr. Eche Idoko, the Publicity Secretary of Crude Oil Refineries Association of Nigeria. This is obviously an ongoing conversation, because oil and gas, especially at this time when there's no more subsidy, has become more attractive. Thank you for your time, and we do hope to have you or a member of the association soon back on the program.
Yeah, thank you very much.
All right, let's move to the markets now. Not the oil markets now, the equities market and the money markets. Aniti Edet has details of how we ended last week.
Well, for the equities market, it's a strong rally so far. It's still a hangover of what you saw in the month of June. July is starting off very strong. Month-to-date rather, is at 3.4%. And then, according to what I have here, year-to-date is at, can you believe it, 23.0%. So the equities market is still rallying on the back of the fiscal reforms announced by the new reforms. Ongoing reforms.
Exactly, because we did have some movement also last week after the suspension of the 2022 finance bill and the executive orders from the president. We also saw that trickle down into the market.
And not just the markets, also for the manufacturers. And you know that
obviously, and if it affects the manufacturers, it affects the stocks.
They're listed on the exchange.
Exactly.
So I'll be talking more of that. But first, let's talk about the Forex market. It's a very grim picture that you see here on the market. Across the FX spots, the forwards, as well as the FX derivatives market, they pulled the total transactions down by about 38.20%. In contrast to what you have in the previous week, this is as of July the 7th. So we saw the FX, the turnover value of transactions there, it was down. And at the same time, we also saw that Nigeria's Forex reserves has dropped to about for the 7th consecutive week. The reasons, we will be talking to our analyst, Princess Iruoba, who will be giving us more details about that. But before we go to Princess, let's take a look at the Naira's performance at the Forex market. The Naira was down by 1.37%. So it ended the week at 762 Naira 39 kobo. What you can see on the board there, in contrast to what it was before. Initially, we had it at about the 400 Naira range, but now it's on the 700 Naira range and still going down. Some are still saying that the Naira might go lower than this. but we will be talking to our analysts to give us more details about that. So, but for now, let's take a quick review of the fixed income market. For the fixed income market, it turned bullish, both for the treasury bills as well as the FGN bond market. And this is because investors there, the average yield across the instruments of the bonds, it contracted by 4 basis points to 13%. So now to give us more details, let's talk to Princess Iruoba, fixed income dealer at FSDH Merchant Bank, to give us more details on that. Thank you for joining us, Princess.
Thank you. Thank you for having me.
Now, okay, so now we have just about 2 questions because of time is not on our side. It's 40 days into the for the first 40 days of President Tinubu's administration, the takeoff, and of course we saw that so far we're in the second half of the year, but the first half of 2021, the bonds market turned bullish on the back of the fiscal reforms. But at the same time, we also see that the equities market is taking more shine. Can you give us more details about this?
Like you rightly said, for the bonds market and fixed income generally, we've seen some form of bullish run, and we've seen that largely driven by liquidity. With the new administration, we've seen some form of change from CRR policies, and we've seen that leave a bit of liquidity in the system, and that's largely driven activities in the fixed income markets. And so we've seen a bit of buy in largely on the long end of the curve, medium to long end of the curve.
Okay, now news just reaching me is that the FMDQ, that's the exchange where Forex is being traded, has adopted a transaction-based model for computing FX rate, and this is expected to this comes after they've abandoned the previous indicative quotation method. So, can you tell us more about this? Educate us more on this.
The FMDQ derivative exchange that will be kicking off on Wednesday, and that will be launching with 2 products: the bond futures and FX futures, like you rightly said. So this is really great and welcome development for market generally. It's the first that we have in Nigeria, and it'll be interesting to see. So expect that this will deepen market participation and a bit more products beyond the pure vanilla that we currently have in the fixed income market and FX markets.
Okay, so now just 30 seconds. Can you give us your expectation for the market? I will be giving my own expectation, but what is your expectation for the market this week?
Okay, for the market, so largely markets will be skewed more towards, so there is a bills auction this week on Wednesday, about 141 billion on offer. We expect that all attention will be on that. The last closed at about 6.23. Given how market has reacted between the last auction and this auction, we expect that there will be some form of rise in stock rate as market players are more inclined to bid at higher levels, given where market is.
Okay, thank you for your time, Princess. And of course, like I'd always say, our eyes are on the market. That was Princess Iruoba, fixed income dealer at FSD Merchant Bank. So now let's take a look at what to expect this week for the market. Starting first with the for our stock markets, this is what it closed the week. But tomorrow we'll be talking more about the equities market. But for an outlook of the markets, we're expecting that traders this week will focus on the June inflation report, which is due to be out. Initially, it was supposed to be out on June the 15th, but since it falls on the weekend, it's going to be released on June the 17th. And of course, that has a way of affecting fixed income dealers, fixed income investors. For the bond market, there's an expectation of uptick in the bonds yield. This comes in the midst of front-loading of significant borrowings by the federal government for this year. At the same time, for the treasury bills market, we expect that the yields in the NTB secondary markets will remain tapered on support by buoyant liquidity conditions. And then there will be a primary market auction by the central bank where they will roll over about 141.17 billion naira worth of maturities at the market just in a couple of days from now.
Yeah, a lot of information there. But Anita, I think you meant to say July, the inflation numbers. You said June.
Yeah, not June inflation data, but to be released in July.
To be released in July. That's next week, Monday, I believe.
Next week, Monday.
Exactly. Thank you so much for that. Well, let's head over to London now, where Juliana joins us with, of course, news from the UK. Juliana, good morning. I hope you had a restful weekend, but now we are here talking about inflation again. All that rest might just fly away. The Bank of England governor is being urged to increase inflation target to more than 2%. And I'm wondering, that's not going to change the reality or reduce the cost of living. So why bother?
You're absolutely right. Good morning, Innie. Inflation, interest rates, it's a big topic of discussion in the UK. In fact, I was reading a piece over the weekend in The Economist saying that the Brits seem to be obsessed with talking about interest rates. And because we do have a man at the helm who is overseeing the rates in this country, Andrew Bailey, the governor of the Bank of England, is under increasing pressure. In fact, Prime Minister Rishi Sunak is being urged by MPs from across all sides of the House to start looking at some of what they believe are outdated forecasting models of the bank. And now we know that the benchmark for interest rates in the UK is 2%. We haven't been there for way over a year. There are suggestions that perhaps when the Monetary Policy Committee gather at Threadneedle Street next week, that interest rates could be hiked yet again. And that, of course, is sending shivers down the back of those who have high loans, particularly mortgage holders who are, of course, on the brink. We've seen mortgage rates go up successively as interest rates have hiked. Now, of course, we know that the reason why the Bank of England are hiking rates is to try and combat inflation, but there are concerns that perhaps this method is not working. So yes, lots of calls, lots of suggestions asking the Bank of England to basically go back to the drawing board and look at whether or not a 2% benchmark is the way forward in this country, considering inflation is just so stubborn. Why should we make a minority of this country suffer with the hike in rates?
Yeah, the reality is still there, and many countries are still dealing with the issue of interest rates. In fact, we have MPC also this month, and we'll watch and see. But what are we expecting for the week?
Well, the big one, of course, today is Joe Biden, US president, has touched down in London. In fact, I can see from the images just in front of me that he has just arrived with his beast and the hundreds of entourage to Downing Street to meet with Prime Minister Rishi Sunak. This is the 6th time the two leaders have met in 8 months, but this is the first time he's actually in Downing Street as Prime Minister. Of course, he is visiting the United Kingdom before world leaders meet for that NATO summit in Lithuania. I think the highlight of today and of Joe Biden's trip is going to be he's meeting with King Charles III. Of course, he wasn't at the King's coronation. Just a couple of weeks ago, he sent his wife, the First Lady Jill Biden. So this is a really important meeting for the two, the first bilateral meet. Their age mates, they both have similar private issues, shall we say, with some of their sons. So it's seen as a good meeting. That special relationship, is it still intact? Some say it's not intact, but I think the fact that he has taken time to stop by London on his way to Lithuania does show that Britain and the United States still do have a very unique, strong relationship.
Yeah, strong indeed. I'm sure you have more from those meetings at 1:30 when you'll be speaking with Laddie. Thank you for your time. And speaking of Laddie, he comes in with some news from the crypto space.
Yep. Speaking of Laddie, well, talking about the market.
And speaking of Laddie.
Yeah. Well, starting the week, quite subdued at this point, but still above 30,000.
Okay,
Not
but
bad.
I mean, even on Friday, when I had to take the market, I mean, it was neutral.
Yeah.
So,
yeah.
I mean...
And I guess we're still, around that point at this time. So
I wonder what's driving it.
I just wonder when we'll see extreme greed.
Oh, come on, don't be so greedy. You had greed.
Yeah, we had greed for the past couple of weeks.
Last week or so, so please.
So let me not be that Oliver Twist.
Exactly.
All right, let's look at what's happening, right now in the market this morning. Let's take a look at the color. Let's see what the color is. I believe the color is red, this morning, talking about the Coin 360 there. We see $30,126. Bitcoin still holding, managing to hold above that 30K level. We see Ethereum also holding 1,800. So it's mostly red. Stable coins also in the red, but just BNB in the green and XRP and a couple of altcoins right now. Let's look at the top cryptocurrencies that we track this morning there. Bitcoin still holding up 30,000 level. Ethereum above the 1.8 level. If you look at the top cryptocurrencies that we track now, see down 0.76%. That's for Ethereum. And we see BNB there. That's the native token for the Binance exchange. That's holding that level 230. Look at that support at $230, 0.82% down. Cardano is a big downer this morning, 1.63%, 28 cents. XRP still flirting around that 50 cents level, but at 46 cents this morning, down 0.29%. Let's bring in Rume Ofi now, financial market analyst. Good morning, Rume.
Good morning, Lodi. Good morning.
Yeah, that's just the excitement I expect from Rume, the bear, even though it's a red market right now. So, Rume, tell me, we got that report that U.S. presidential candidate RFK Jr., that's John Kennedy Jr., his financial disclosures reveal he has up to $250,000 in Bitcoin, and he could also be accepting donations in Bitcoin. What are you hearing about this?
Thank you very much, Ladi. I'm very, very happy things are actually changing in the crypto space. Fast forward to in 2019 when Donald Trump said, I am not a fan of Bitcoin or cryptocurrency, but today we have seen politicians come out to say, I'm going to be taking Bitcoin as donations and to finance their campaign. But it's been reported now that from the campaign organization from Kennedy, Robert Kennedy Jr., that those funds are not his. It's his wife's investment, because he said it in the 2023 Bitcoin conference that he is not an investor in Bitcoin, although he has interest. He loves the technology, the freedom that it gives. It helps democratize payment. And it's so because of the fact that a lot of things have happened in the US, bailing of banks, the Ukraine war, and the citizens are saying this is our money and it's affecting our lives. So let's have some kind of freedom to do things by ourselves. And it's quite interesting that we have two Republicans also saying that they're going to accept Bitcoin as against what we know Republicans for being rigid and making sure that finances are not going the way the Democrats are doing, like Vivek and Ron DeSantis, very popular candidate in Florida, is a Florida governor. These guys are actually making this interest tilt towards a certain population, which are young people. It's also not out of place to say that about 20% of adult population in the US are now exposed to Bitcoin and cryptocurrencies for transactions. So in terms of the donation, where the donations are going to be coming from, it's also going to be known, because the Bitcoin blockchain is an open ledger where transactions could be seen moving in and out, not like regular cash where transactions could be done on the other side. But it's quite unfortunate, though, that people say that Bitcoin is for criminals and the ledger is open for anybody thinking of trying to do any kind of movement of fund using Bitcoin. You can be tracked, and the system is going to show you where the transaction is coming from, where the money is moving from, with help of companies like Chainalysis. So it's a very good thing, and we hope to see the very best of this election in the US. And I love the fact that technology is playing a very huge role.
I guess I'm wondering what the Bitcoin community are going to do with a pro-Bitcoin, candidate. Let's see how that plays out. Thank you so much, Rume Ofi, financial market analyst. Thank you.
Thank you, Ladi.
All right, so let's look at the top gainers now. Come there, top of the counter. The only double-digit gain we have this morning, 12.02%, $58.70. Curve Dow is also down list, up 1.80% at 80 cents. So, that's how the market is looking. And now we're seeing, pro-Bitcoin candidates for that U.S. presidency. I wonder what the, crypto community will say. How they going to see that?
I wonder how SEC, SEC, they've been having a running battle. It's
exactly with this one being a security or not. So how are they going to see a pro-Bitcoin candidate?
Well, let's say that would be a motivation for a lot of members of the Bitcoin community to
Right.
go out there and participate in the election.
Exactly.
And see if they'll push their
Accepting
interest.
donations in Bitcoin.
In
Quite
Bitcoin.
interesting.
I think that's going to move the price.
Exactly. It'll have some impact. That's for
Yeah,
sure.
I think so. Watch out for it. Thank you so much, Laddie.
Thank you.
We'll see you at 1:30
Yeah.
for Business
See you.
Incorporated. Well, it's the first 55 minutes for the week. We have another one tomorrow and the day after, so do join me tomorrow. But I'll see you at 10 p.m. for the stock market report. I'm Mini John Mekwa. Have a great day.